I've taught sessions on this about how to stay tax neutral, tax efficient, and that is, figuring out your income and the different kinds of income there are, because that's a big deal, and then aligning an asset class to kind of connect or align with that stream of income to wipe out the tax liability on that stream of income. That's the name of the game, and that's the one I play.
In 2003, I read the book Rich Dad, Poor Dad, and there's a chapter in that book that really stands out in my mind. It was about his rich dad's advisors. He'd walk into this room and there would be a table, and around it would be his banker and his accountant and his business manager and his property manager. And in my mind, I could see it. In my mind, I could feel it. It was like so powerful. I was like, wow, that is incredible that he has all of these people around him helping him for the goal of truly building real wealth. And then I went down the rabbit hole and I read Think and Grow Rich. And in that, there's a chapter about a mastermind in there. So always in my mind, I said to myself, as soon as I get to the point where my bank account was big enough, I was going to really start recruiting incredible people. And I went to a mastermind in Tulum, Mexico, and I met a guy by the name of Jim Dew. And Jim Dew is, he lives here in Scottsdale, Arizona. I live here in Phoenix. And what he does is he puts together family offices for entrepreneurs that have built up a certain amount of wealth. And what he does there is he vets out incredible opportunities for places to put your money for really one of three things: for another income stream, for long-term equity growth, and for tax problems, right? If you're paying an incredible amount of taxes, and my taxes kept going up and up and up and up, the more that my business was growing, my wholesaling business was growing. And so that led me to the incredible person that I have on the podcast today, who put together an incredible fund called Prestige Fund that goes out and buys a bunch of ATMs, and it really, really, really affects how much I pay in taxes. And I'm real excited to dig into that. But this is the Wholesaling Inc. podcast. We're going to be talking about real estate. The person I'm talking about, by the way, his name is Dave Zook, and you can find him at therealassetinvestor.com, therealassetinvestor.com. I highly suggest you check that out. Let me give you some stats here. Had 3,000 multifamily units, just sold them. Has self-storage in the amount of $300 to $400 million worth of self-storage, and now it's $300 to $400 million in ATM and a bunch of other things. Dave, it is just an absolute honor and pleasure to have you on the podcast. Say hello to the Rhino Tribe.
Brent, how are you? Hello, Tribe. It's good to be here.
So, Dave, you come from a family of entrepreneurs. Is that right?
I do. Very fortunate. I was born and raised in an entrepreneurial, very business friendly family. Raised in business, and then that's sort of all I know. I mean, I worked for a few years for my dad and was on payroll, but that only lasted a few years. I started out on my own. So I always tell my wife I would probably make a terrible employee, but I love the business world. I love being an entrepreneur. I live and breathe this stuff.
And what kind of business was your family in, or is your family in?
Yeah, so we still are. In fact, the business is growing a lot. We're in a modular building business. So we have Zook Cabins, my last name, Zook Cabins. We've got Horizon Structures, and we've got Stall Structures, or the domain name mysheds.com. So we build outdoor buildings, prefabricated and modular buildings, and we ship them all over the country. In fact, I got 2 drivers right now that are taking 2 modular dog kennels to California from Pennsylvania.
Awesome. And was there, growing up in a family that your in the family of entrepreneurs, was there any difficult times, or has it been pretty smooth sailing? They had really good fundamentals, and like your grandpa was an entrepreneur and his dad and all that. Like, is this a long-term family business? Was there any turbulence? I mean, we're talking to everybody on this podcast, whether they're watching it or listening to this, is an entrepreneur. And so, and some are just starting out, and there's a lot of time and attention that it takes to really get your business off the ground. What was your experience growing up?
No, I mean, entrepreneurism, business, no, there was no problem. It was smooth sailing, never had a hard time. No, what do you think? Of course there was hard times. Of course there was problems. I mean, and here's the thing. If you're going to be an entrepreneur, you're going to be a business owner, you got to come to expect that. Buckle up. And, because, look, things don't always happen the way they're supposed to happen. I mean, 2008 and 9 happens, right?
Yep.
2020 happens. COVID
Yep.
happens. Stuff happens, and you gotta be, you gotta navigate through some things that you don't have in your playbook. You gotta you gotta make the rules sometimes as things are happening around you. So, no, so in terms of how long in the family business, my dad bought this business the year I was born. So this is second generation. We got third generation. My kids and my brother's kids are now in the business. So I'm second generation, and
So what do you
and
do?
and it's going down from first generation to second generation. It's going down as pretty much as scripted. First generation builds, second generation, kind of escalates and takes it on its path. Now, what we're trying to do and spending a lot of time, energy, and focus on is making sure that the third generation doesn't follow the script. And we're trying to set them up for success to make sure that it'll go on into the fourth, fifth, sixth, eighth, 10th generation.
Yeah, but Dave, you're already wildly wealthy. I mean, aren't your kids super spoiled? Like, why do they even have to work? Isn't that the dream, that your kids can just do whatever they want all the time and just run around and live life to the fullest?
So I'll answer that question like this. My daughter and I just had a conversation about this. She just got her permit. She's 16. She just got her permit, and she was asking me about, if she was wondering if I could pay her gas. She's going to school, and she's wondering if I could pay her gas, and I told her, I was like, absolutely not. That would take away your incentive to go find a job and to work and to make sure that you got enough of money to pay the gas. It's the last thing I want to do. And so instead of giving her the money, though, I've given her some opportunity. She now cleans our real asset investor offices, and she gets paid well for cleaning them. So I give my kids opportunities, but I don't give them the money.
I love it. And I had seen in a different interview that your dad was a single family investor, right? Or is a single family investor. And you got into that. What do you think about owning single family properties?
I think it's a great place to start. I've owned single family homes. That's kind of where I got my start. I got my oldest son started investing in single family homes. He's got a couple of them now. He's into some short term rentals and doing very well. So yeah, I think it's a great place to start. I mean, the barrier to entry is fairly low. You can get in there, and I think the good thing is, in that space you can get a taste of it, and you can get away with making a few mistakes. And
Yep.
that's what it's all about. You want to make mistakes. You want to make mistakes fast, often and early, and you want to learn from those mistakes, and then you kind of want to scale up from there. So it's a great launch pad, but you get away with making a few mistakes without getting killed.
Yeah, I put it on my whiteboard in my office today, Dave. Your quote here: "Forget the mistake, remember the lesson."
Exactly.
Right?
Exactly.
And I feel like single family property, that is your way to really understand, and really make those mistakes, but not get totally wiped out. Right?
Yeah. And it's okay. It's even better when it doesn't have to be your mistake. It's good to go out and make mistakes and learn from them, but it's even better when you can learn from other people's mistakes, and that goes both ways. You can learn from other people's mistakes, and then you can learn, and you can also learn. It works the same way as when you go to learn from people who've done great things and done great things. You want to learn how to do those things. A good friend of mine, now deceased, Bob Helms, always said, you don't have to come up with your own bright ideas. You can adopt them. You don't have to give childbirth yourself. You can just go ahead and adopt them, and take other people's great ideas and learn from them. But the same way with mistakes. I mean, you can learn from other people's mistakes.
So your dad gave you a great foundation. Your family gave you a great foundation. Did you have mentors? Did you look for people that maybe have made those mistakes, and have succeeded beyond those mistakes and learn those lessons that you were able to implement and grow so fast and get to the point where you're at 300-400 million in self-storage and the same in ATMs?
Oh, for sure, and I still do. I'm very intentional about keeping my mentors close to me, tapping into, I love to have the old gray-haired guys on my team. The people that have either made the mistakes or seen the mistakes, who've got a deep business background and have been around business, people who can, call out my stuff, and or give me guidance. And when I come to somebody with an issue, a challenge, a problem, an opportunity, whatever, and I can go to those people with it and know without a shadow of doubt that I'm going to get good, wise counsel. That's that you can't even put a price tag on that.
How do you find these people? I mean, it's not like you're just knocking on their door at their office and being like, "Hey, I hear you're successful. Can you teach me?"
Yeah. So, I mean, it's a work in progress, and it's something that I'll be working on for the rest of my life. You got to start with where you're at. No, you're not going to tap into Warren Buffett on day one, but there will be some successful business person in your town who, one of the things I've found is super successful people are generally very open to sharing. Yep. They're not like, oh no, I'll hold my cards real close to my chest, and I don't want you to find any, learn anything, because that means you're going to take some of what's mine. They're not like that, and so there will be somebody in your town or close to you somewhere that's doing, something very well, and to be able to tap into that person, whether it's locally or somebody you meet at a meetup, investor meetup, or something like that. And there will be times when you outgrow that person, but you're always, that doesn't mean that you dump them in the ditch and now, go off. No, you maintain those relationships, but you just, take another step and just continue to grow that. And I'll be doing that for the rest of my life. And so, there'll be times when you outgrow your CPA, when you outgrow your attorney. Hopefully that's the case. But, this isn't something where you just build and now you've arrived and now you just sail for the rest of your life. This is something that you continue to do for the rest of your life.
So we teach on this podcast to go out there, have quality conversations with people that own distressed real estate, get those properties under contract and sell those to investors that either want to put them into their portfolio or they want to flip them. And that is the seed money that we have to then go out and actually put into assets, right? To go out there and to invest into real estate, invest into something that's going to give us some tax benefits, income streams, and long-term equity growth. When you're looking at somebody that's just starting out, or you're having a conversation with somebody just starting out, do you think there's a good time and a bad time to buy real estate?
So that's a broad question, and real estate, there's so many different kinds of real estate, and it doesn't matter what kind of a bull market you're in. It doesn't matter if the real estate market is white hot. There's always an opportunity within a certain segment of real estate. So saying opportunity in real estate is, that's pretty broad. And you can look at, anything between self-storage and retail and warehousing and industrial, whatever, and even segments within those asset classes, where there will be opportunity. Now, as a general statement, let's just go to the most popular asset class, for the last, decade or two, multifamily apartments. I will tell you that the low-hanging fruit, that we've seen 10 years ago, it's not like that today. That doesn't mean that there's not opportunities, but you better know what you're doing. There are opportunities out there, and there's people that do very well, even in today's market, and they'll do well, over the next 2 years, 5 years, 10 years. But, it's not as easy as it was 10 years ago. The low-hanging fruit, like we had in 2013, 2011, 12, 13, 14, when I was buying, it's not as easy as it was back then. Doesn't mean
timing
that you
matters.
can't do really well and that there's not opportunities, though.
Well, and I should have clarified. I mean, going in, typically what we do is it's like Monopoly, right? We get the little green houses, we get four of those, and then we put them into a red hotel type of thing, right? Classic rich dad, poor dad, classic Monopoly, right? And so what most people do, they're finding opportunities. They go and sell these properties or wholesale these properties. They get some income, and then they go buy single family properties. And I have seen recently in this market that people are just getting crushed by buying these single family properties. One, it's a huge distraction from their business of going out there and finding the discounted properties and selling those. But two, they buy a property and it's just going to kind of be flat for a while. Do you think that timing matters?
Well, at the end of the day, it depends. It depends on why you're doing it. If you're looking to buy to then sell in 2 years, be careful.
Yeah.
If you're looking to hold for 10 years, at that point, you got to make sure that you're in a market that's strong, that is sustainable, that has some interesting drivers, that has population growth and job growth and all those things. You got to make sure the numbers work. So those are two very different things. And you just gotta know which one, where you're at in the whole cycle. But if you're a flipper in today's market and you plan to buy and sell to somebody at a higher price in a year from now, that's a different game. And
better get good deals.
And it better be a good deal. Yeah.
That's awesome. So, how did you started with multifamily? You were doing single family, and then you got into multifamily. You owned 200 units yourself, and then you started syndications. Is that right?
Yeah, so I had bought a couple hundred units. It was more than two. It was probably 300-ish units on my own. I ran on my own cash, and then I brought my family in, and then I brought family and friends after that. I really didn't even start out. When I first started buying multifamily, I started out buying multifamily because I had a tax problem. And I was paying $500,000 a year in tax. And so, I was in that conventional box. Prior to that, I thought that, if you make a lot of money, you got to pay a lot of tax. And when I realized that wasn't true, and realized that multifamily apartments and cost segregation studies and bonus depreciation and all that stuff, that could, it could be a real tax protection vehicle. That's when I got really interested and started buying those apartment buildings. Fast forward a year or so, and a year or two, and I had bought a couple hundred units of my own. Now I've got the team set up, I've got the relationship with the broker, I got everything going on, and there was still, back in the day, there was still a lot of low-hanging fruit, and there was opportunities, cash-flowing properties, and so the next deal came along. I'm out of money. And the next deal came along, and I'm trying to figure out, okay, how do we get this deal done? And I didn't even know how to spell syndication back then. And so anyway, so I got a couple. I got first it was family, then it was family and friends, and then it was family and friends and business associates. So I sort of just started going down that path, and really got to be just, I could point to what I was doing on my side, and then take it out to a business associate and say, look, here's what we're doing. Do you want to play? And so started kind of growing just locally, organically, and it just really, after delivering good returns for a while, it started really kind of growing on its own organically, and eventually I got noticed, and started ending up on podcasts like this or webinars like this, whatever.
That's awesome. And then, but isn't that expensive? I mean, don't you have to, there's a ton of hoops and attorneys, and you have to make sure that when you're raising funds, that all the paperwork is correct. Was that a big hurdle? Because listen, everybody listening to this wants to be in that position, right? Owning just 2,000, 3,000 properties, or even 100 properties. But at some point, you're going to have to raise funds for that. You're going to have to be able to raise capital for that, unless you're going to try to do it all yourself. But everybody wants to run faster. They want to get there faster. They want to get these opportunities that are in front of them, especially as the markets shift and we see, some more opportunities coming up in the next few years. Is it overwhelming the first time that you were trying to raise funds and talk to all these attorneys? And how long does that process take?
Oh, for sure. I mean, I was way out of my comfort zone. And, but it goes back to what you asked me earlier, and that is, do I have mentors? I went and found the only people that I knew that were teaching this stuff, and they were the best people that I knew that had anything to do with syndication. And I quickly, joined up to their, very expensive inner circle, and surrounded myself with mentors and people who were doing it. And people who were doing things that I wanted to do and were in places that I wanted to be. And so, I always tell people, I didn't go to college, but I've paid enough in my own education. I could probably put myself through Harvard a couple times. That's if I was smart enough, which I'm not. But as far as the expense part, I mean, I could have ran myself through some Ivy League schools a number of times with the amount of money that I spent on my own education.
Awesome. And you just sold the rest of your apartments.
Yeah. So I sold my last 286 unit apartment building in August. So a couple months ago.
Why ever sell them? I mean, you could hold on to them forever, right? People talk about legacy. People talk about buying properties and never selling them. Why did you make the decision to sell them over the last couple of years?
There was a number of reasons. Couple reasons. One is, there was the market was hot. The market was red hot. Felt like a really good time to sell. I had a partner that had some real health issues, who was also my property manager. Ended up having to buy him out because he had a very bad, he was in a bad situation from a health perspective. Mm-hmm. There was, and you're talking, B and C class, that's very management intensive. So, I had an opportunity back in about 17, I believe, back about 5-6 years ago, to get into self-storage space. I was always interested in the self-storage space, so I sort of shifted my priorities and started getting into the self-storage space and out of apartments. Could I have done both? Sure. Had I had a world-class partner and a great management team right then, I may have held on to some of them. Although looking back, I mean, buying them in 2012, 13, 14, all the way back up into 17 and 18. I think we bought our last one in the fall of 18, and then selling them into the hype of 2021 and 22. There was some margin there. So being able to kind of take advantage of that situation, at the same time I was kind of kind of shifting my priorities and going into self-storage, it was a good move. It worked out.
Are you able to, with that? I mean, I assume you made just an incredible amount. How do you not get totally destroyed in taxes when you sell that?
So there's a number of ways, and I teach this stuff, by the way. I teach a lot of people on how to stay tax efficient, and being able to take a 20% capital gain, and then being able to invest in car washes, 100% bonus depreciation, ATMs, 100% bonus depreciation in year one. Investing in some energy projects, very heavy on the depreciation side. So really just, getting strategic with a number of those things, and really using other asset classes to shield myself from a tax liability. But that's the game I play. I mean, I live and breathe that stuff. So it really wasn't that hard. It's like second nature to me.
What is bonus depreciation?
Bonus depreciation. So let's take an ATM. We're top four. We're one of the top four ATM players in the country. So look at an ATM like a piece of equipment. Normally on a regular depreciation schedule, you can write it off to take it down to zero in 5 years.
Yep.
Okay, but with the bonus depreciation that's available to us, you can accelerate that and pull that 5-year depreciation into the first year. So that means like this month in December of this year, if I make $100,000 investment into an ATM, play, I can get, I can get 100% bonus depreciation. Meaning, if I invest $100,000, my K1 in that first year is going to show a $100,000 loss. So that means if I sold an apartment building, I made $100,000 profit. Now I take that $100,000 profit and I place it into an ATM investment. I'm like neutral. I'm like net neutral. So there is no tax. So really, I've taught sessions on this about how to stay tax neutral, tax efficient, and that is figuring out your income and the different kinds of income there are, because that's a big deal. You've got your active income, active or ordinary income. You've got your passive income. You've got your capital gains income, and some have portfolio income. There's 6 different ones, or kind of 3 primary ones, and then taking different, figuring out what that is for you personally, and then aligning an asset class to to kind of connect or align with that stream of income to wipe out the tax liability on that stream of income. That's the name of the game, and that's the one I play.
And the ATMs make a nice return.
Oh my goodness! I mean, you start with that. You don't start with the tax. You start with the business. You start with the asset, the ATM, whatever. You got to make sure that thing makes sense from a business or investment perspective, but then the tax piece is like the icing on the cake.
And so you liquidated all your apartments, put it into other asset classes, and protected your profits.
Yes.
Incredible.
Yeah, that ended up being a tax-free event for me.
And I assume you have just a mountain of accountants helping you.
I have one CPA. I mean, he's one of the best in the country. But we're talking on a daily and weekly basis. In fact, I was just talking to him an hour before I jumped on here with you. But we're working through this stuff on a daily and weekly basis. And sometimes, we're at the point now where, not only am I working on my own stuff with my CPA, but we're working on some pretty good sized transactions. Last week I was on a Zoom call with a 20-something year old guy, sold his portion of the business, which was a 30% stake, sold 30% of his company for $42 million. And so in those kind of situations, A lot of times I'll be working with them, talking through stuff, and a transaction like that where it was a sale and we had to find out, how the business was sold and sort of what entities, and if it was a stock sale or an asset sale, if it was, if it was ordinary income, passive income, if it was capital gain, all that stuff. In those types of situations, I'll tap into my CPA. I'll bring him on the line. We'll talk through some of that stuff. But working side by side with the best CPA in the country, one of the best CPAs in the country, on a daily and weekly basis, I can hold my own with some of the best CPAs out there now.
I love it, Dave. Give some, and you said that you teach about this. Where can people find that? Where can people connect with some of the things that you're teaching about protecting themselves from tax problems?
Yeah, so I'm actually on radio shows or podcasts like this quite a lot. I don't seek them out; they come and seek me out. But I'm on the air like this. Oftentimes several times a week. So I get a YouTube channel that's fairly active, but most of the time I'm teaching on other people's platforms.
Sure.
So mine isn't like super active because most of the time I'm on platforms like this where somebody else is the host and I just come on. So it's a lot less work like that.
Sure.
I
love it.
I'm sure you know what I'm talking about.
I do. 100%. Speak now to somebody that's never done a deal, never done a real estate deal. What advice would you give them, and what action do you think that you would? What instruction would you give them to take action?
Well, so I'm a big believer of life rewards action.
Yep.
So you can analyze, overanalyze, and if you're the engineer or the kind of the person that wants to think everything through and get the answer, that's your style. Okay, that's fine. At some point though, you're gonna have to get off the couch and get off the computer, and you're gonna have to go out and do something.
Yep.
Life rewards action. So go to those investor meetups. Go meet those people that are doing what you want to do, and learn from them. Educate yourself first. If that means having to pay for that education, I paid dearly for a lot of the education that I've done over the last decade or two. So invest in yourself first, and then go out and do it. And just know that you're going to make mistakes, and it's okay. Just make them fast and early, and learn from them, and learn from other people's mistakes, and go do it.
Dave, thank you so much for being on here. It's an honor. Thank you for taking care of some of my funds and helping me out with my taxes. I really appreciate it. And that's it, guys. Listen, if you're interested in joining the most proactive group in real estate investing, the most proactive community in real estate investing, go to wholesalinginc.com, wholesalinginc.com. Check out what it's all about. If it feels good in your gut, sign up for a call. And that is it. Dave, thank you for being on here. And as always, I sign off encouraging everybody to go out there and talk to people. Love you guys. See ya.
Thanks, guys.